Welcome to the Deep Dive, your shortcut to being well-informed. Today, we're digging into a really interesting day for the stock market, looking back at Monday, July 28th, 2025. We actually kicked off the day with, well, a big wave of optimism, a really strong start.
Yeah, that was driven by that weekend framework trade agreement, wasn't it, between the U.S. and the European Union? Stock futures looked great early on.
They did.
But, that enthusiasm, it turned out to be pretty fleeting, as it often does.
Right.
As the session went on, the market's focus really shifted pretty sharply, away from the trade news and towards what some analysts were calling a data gauntlet.
A data gauntlet. Okay.
Yeah, basically a whole slate of upcoming catalysts, big economic reports that could really move things.
So that's our mission today. Let's unpack this session for you, see how that big picture geopolitical stuff mixed with the looming economic events and some pretty surprising company news, too.
Absolutely. So despite the good news on trade, investors almost immediately started bracing themselves.
For what was coming next, yeah.
Exactly. We're talking about a Federal Reserve decision on monetary policy, the first estimate of Q2 GDP.
Crucial numbers.
The July jobs report, always a big one. And then this flood of earnings from the mega cap tech giants,
Yeah.
Microsoft, Apple, Amazon, Meta.
Wow, okay, so quite a week lined up. And the result was this risk-off feeling setting in.
Pretty much. That initial rally just faded away, led to a really choppy, kind of mixed session overall.
And you have to remember, right, the major indices were already at or near all-time highs. Valuations looked, well, pretty rich to many people.
Stretched, yeah, meaning prices already had a lot of good news baked in. So without big new catalysts, not much immediate room to run higher.
So how did the day actually shake out? The NASDAQ, the tech-heavy index, that was the standout. Had a new all-time high, actually, up, about 0.33%?
Mostly that AI momentum still carrying things.
And the Dow Jones Industrial Average, it finished down slightly, about 0.14%. And the S&P 500 just hovered near flat, basically unchanged.
Yeah, up just 0.02%. But technically, that was still its sixth record close in a row. So mixed signals there.
Definitely mixed. And what about the VIX, the fear gauge?
Ah, yes, the VIX. It actually ticked higher, up almost 3%, closing around 15.36.
Okay, so not panic levels, but...
No, not panic, but it does signal maybe more investor anxiety creeping in.
Right.
Suggests some hedging, perhaps, the smart money getting a little cautious, even as indices hit records.
That's a really interesting point. Okay, let's shift gears a bit from the broad market, because there were some truly standout individual stories today.
Oh, yeah.
Celcuity Inc., ticker CELC, clinical stage biotech, it surged, wait for this, 168% today.
Wow, 168%? What happened?
They announced just incredibly positive phase 3 trial data for a new breast cancer therapy, gedatolisib, talking about a massive reduction in disease progression risk, huge improvement in survival time.
That's incredible. And that's a great example, really, of a stock picker's victory, isn't it? It's got almost nothing to do with those broader market trends we were just talking about, and kind of stands out because the healthcare sector overall has been underperforming this year, right? Due to macro stuff.
Exactly. It just shows that fundamental breakthroughs can still create these huge, uncorrelated gains.
A good reminder.
And then, switching back maybe to the bigger themes, we still saw that AI story dominating.
Still going strong.
Yeah. Significant gains in key players like Supermicrocomputer, SMCI, that was up over 10%. And Tesla, TSLA, up over 4%. That followed its huge $16.5 billion AI chip deal with Samsung.
So the AI infrastructure play is still very much alive.
Definitely. Now, looking beyond the U.S., what about internationally?
It was a bit of a mixed bag, really. Europe and Asia had varied performance. No strong single direction.
But India seemed to stand out, didn't it, on the downside?
It did, yeah. Significant underperformance there. The Nifty 50 index fell to a one-month low.
Any particular reasons driving that?
Seems like a few things hitting at once. The stalemate in India-U.S. trade talks isn't helping. Some disappointing bank earnings. And then negative news out of their big IT sector. Tata Consultancy Services announced some workforce reductions.
Got it. And if you connect that back to the geopolitics...
Well, it's interesting, right? You have the U.S.-EU deal strengthening that alliance. Europe buying more U.S. military gear, replacing Russian gas with U.S. LNG.
Right.
But the impasse with India kind of highlights the complexities there, and India pursuing its own path. Investors are noticing that divergence.
Makes sense. Okay, quickly, what about commodities and currencies? How did they react?
Oil, WTI crude, actually rose, got up over $66 a barrel. Seemed like the trade deal eased some of those global slowdown fears.
Okay.
But gold futures went the other way, fell to around $3,315 an ounce. Less demand for safe havens, maybe?
And the dollar?
The U.S. dollar index strengthened up to about 98.17, helped by the trade news and that idea of U.S. economic resilience, perhaps.
Okay, so looking ahead now, tomorrow, July 29th, what's on tap?
More earnings. Keep an eye on SoFi Technologies. Member growth is always key there. PayPal reports too, and Procter & Gamble.
And you mentioned a trend this earnings season.
Yeah, we've been seeing a bit of a sell on the news reaction sometimes. Even with good results, stocks sometimes pull back, so something to watch.
All right, so the big question for you, listening in, can the resilience we've seen in the U.S. economy in corporate profits really justify these high valuations we keep talking about? And can the market push through this wall of worry with all the data coming this week? What does today's mixed market really signal? Is it just a pause? Something more?
Lots to think about.
Definitely something for you to consider as we wrap up this deep dive.